Beyond share price is currently at $26, but after last night's earnings call, I believe this company is easily $100 plus in the near future. I actually think there's more opportunity in Beyond for your portfolio than there is in Nvidia. The rebrand of Beyond is such an exciting prospect. Now they've added things like Baby and Beyond, as well as Bed Bath & Beyond and Overstock. They've also added a coming soon section where you have Kids and Beyond, College Living, Studio 4 Beyond, and Backyard and Beyond. One of Marcus Lemonis's main things is covering the whole different sectors of someone's house. Whether that's services that he's going to look into, anything that can drive performance is where this business can really thrive. He also adds things like welcome rewards, home loans, different Beyond protection, and home improvement services that can really drive performance of this business. You can see that the way they want to make this business cover every single aspect, and I think this company is going to really drive shareholder value. And the earnings report really alleviated some of that pressure that there was before with the Beyond brand. So if I jump right into Beyond's earnings report, you can see that they had a massive rapid growth in active customer file, which is the main thing that Marcus Lemonis especially wanted to improve. This company has certainly changed a lot in the 75 days before he joined, and there have been so many different developments that he mentioned on this call, which I'm going to jump into. Now, as he mentioned, over the last kind of 75 days, he was looking to lay that foundation, differentiate the business model with a higher customer affinity. And the way he wanted to do this was make sure that the active customer file grew year over year, and he managed to do that by 9%, which is actually compared to Wayfair's, which reported today, they only grew their file 1%. So you can see the opportunity in Beyond is already starting to happen. So not only this, they also mentioned that they wanted to provide a service level that improves retention and minimizes customer returns. And they want to do this by making their improved margins and profitability through their core business. They also mentioned they wanted to review the Medici Ventures assets. Now, if you haven't seen some of the other videos I've done for Beyond, I have talked about the different companies inside Medici and how they can perform and help with the share price of Beyond and incorporate into that potential $100 a share, maybe even higher, depending on some of the potential of these businesses. Not only this, they also laid out probably the most important section of Beyond, which was their guidance. Now, in 2024, they are guiding $2 billion. For reference, total last year averaged around 1.6 billion. So that would be an increase of 25% or a re-acceleration of growth, which would be fantastic. Not only this, they also thought that by the end of 2025, they're estimating 3 billion, which is almost another 30% increase on top of 2025 numbers. And then again in 2026, they even mentioned that they want to hit around 3.4 to 3.5 billion dollars, which again is another 20% increase in revenue. So you can see this company is becoming again almost a new highly growth company, which is great for share performance, especially if they can get to profitability fast. They also mentioned that as a team of the last quarter or the most recent quarter gone, that the Q4 earnings they were disappointed with, even though the revenue number beat by around 15% on the different high level view of the revenue compared to the EPS, which did come in unfortunately not great at minus $1.22 after EPS. The numbers are still fantastic going forward. And this is what we're all about. So looking at the metrics now for Beyond, these are the most important metrics in my personal opinion, which is based on the active customer file. They grew that by 9%, as I mentioned, from around 5 million to 5.6 million, which is fantastic. Adding almost 600,000 people to the site is amazing business, in my opinion. They did buy a lot of this business by increasing that marketing expense. However, when you compare it to companies like Wayfair, which struggled to grow their customer file anywhere near 1 to 2%, you can see that there is a massive opportunity and we're only getting started in this business. The total revenue was also a surprise to the upside. As I said, 384 million when the estimates were closer to 345 million. The gross profit was down mainly due to the re-expansion of Bed Bath & Beyond, trying to gain customers where they'll obviously discount their products, which obviously puts more pressure on the gross profit margin. So you can see that potentially going into the back half of the year, which is what Marcus Lemonis guided, that they expect this to improve closer to kind of back to normal, which is around the 20% mark, which is going to help profitability massively. Obviously, they have made some losses, but those losses are all in the expectation that they can grow that active customer file and essentially sacrifice some profits for growth and market share, which I believe is vital, especially when you consider some of the pressure on other companies like Wayfair, like Etsy, that have struggled as well. And there are definitely other businesses in the retail space which are definitely able to be capitalized on by Beyond's expansion. The other thing that I mentioned was the EPS. Now, they did dilute slightly. They obviously lost a share and missed by around 50 cents of the expected, which was 79 cents or 77 cents, I believe, negative. They missed that and they reported non-GAAP of minus $1.22. However, the main point is around that cash and cash equivalents. Even though they lost 161 million, they still totaled 303 million in cash, and for a $1 billion business, this is still a lot of cash to work with, especially with the expansion of what they can do with the Overstock website as well, and different areas like Baby and Beyond, and some other different back to school as well, that Beyond are also looking to expand in. When comparing it to the full year results now, the total revenue was 1.6 billion, and that was a decrease of 19% over year. Now, with the guidance of $2 billion, that is just going to be fantastic. And I think the share price will eventually reflect the guidance that they decided. Not only this, the addition of the new CEO of Beyond is going to definitely help with the leadership of those specific companies. You have a more delegated structure in terms of the different leaders, where you have Dave Nielsen on Overstock, and then you have Chandra Holt on Beyond, and then Marcus Lemonis essentially being that executive chairman who kind of links the two together and the whole business, which I think is going to really provide some fantastic different elements of what they can do with this company and re-accelerate so much growth in this business. The other element which I think is going to be vital to improving Beyond share price is the incentives that all the different directors and head leadership roles in Beyond are now incentivized to perform based on share price. Now, what essentially Marcus Lemonis has created is a structure where he gets paid out and all his team get paid out dependent on the share price of Beyond. And this definitely aligns with shareholders. You can see the different price metrics that the executive chairman Marcus Lemonis laid out. He mentioned that the $45 stock price is going to essentially execute $500,000 of stock options, which would be granted to himself. And then there are also different other metrics dependent that they have to hit in order to gain these shares. For example, I believe that they have to ensure that they reach a target of $2 billion of revenue for 2024. Again, 2.7 for 2025, and then 3.4 for 2026. Now, that doesn't mean they can't do better than this. They definitely can, but it's just kind of a low option where they will get paid out by some initial performance. And what I will say is that when management is incentivized to get the share price higher, they will do anything to reach that share price because it means they make a lot of money and it means we make a lot of money. So you can see this is where the business really has a great opportunity to drive real shareholder value, which I think most businesses are lacking nowadays. Now, there was a lot that they talked on the call in how they can essentially get back up to that $2 billion range. And I recommend listening to the call if you haven't already. But the silver bullet, which is what Marcus Lemonis said, is going to be the Overstock brand. Now, with Dave Nielsen, who has 20 years experience in the Overstock brand, they believe that the vital mistake they made was not having the Overstock and the Beyond run side by side. Instead, they tried to put the Overstock brand into Bed Bath & Beyond and try and grow it as one, which is definitely the wrong idea. And that's what Marcus Lemonis said. By bringing back Overstock, and they already mentioned that the actual site for Overstock, the rebrand, and how it's going to be more of a liquidator site and bring back things like jewelry, which apparently it was $100 million in terms of contributions to Overstock's revenue. That is all coming back, and it's going to be a much more better and designed website. They do have the current old format already in place for any other Overstock people that are potentially looking to buy some products. But this is going to be also something that is going to be rebranded to a much more user-friendly website. The other great thing about Overstock is that the higher margins of the products. Things like sofas, different assortments in the Overstock are much more higher margin things and also higher order value. And that's really going to help with some of the margins, especially coming into the tail half of 2024. Where we compared to Beyond, they sell very different item assortments, obviously more closer to towels, bedding, that kind of equipment. That is all going to be much lower margin compared to Overstock. So when you combine these two together, you're going to have some massive revenue pools that is really going to improve performance, especially when you add up the customer file and maybe you can gain some synergies between both brands. That's where this company has a massive opportunity. So here's how we hit $100 a share. And this is where I think the stock price can potentially go in the next 12 to 24 months. Now, with the guidance of $2 billion, the essential market cap at $100 a share would be around $4 billion. Now, you're probably thinking, well, they need to be and become more profitable in that time. Obviously, they mentioned that margins will be slightly under pressure in the first quarter, but they expect that to slowly improve coming into the second, third, and fourth quarter. Especially with the macroeconomic environment, this could also be a massive tailwind, dependent on if interest rates come down and existing home sales improve slightly. That is going to definitely help with the performance of this stock too. Then you consider the Overstock brand coming back online. That is going to drive massive revenues at higher margins. And this is what this business needs. It needs to go back in the right direction. And I think we're already starting to see that, especially with the revenue numbers come in. We can already see that this business is performing much better than it was in just the last quarter. So the other thing to mention is the different share price alignment. This is something that is really going to be beneficial. And I think that management will do everything they can because they get paid as well as we get paid. And I think it's great that we're both aligned for the right incentive, probably the first time in this company's history, to be honest. I am personally buying more of this company because I think the opportunity has just got better and better. And the earnings call was so great to listen to. Marcus Lemonis is fantastic. And I think when you compare his other different ventures like Camping World, that he's really going to drive some massive revenue and some massive interest in this business, which is going to help our shareholders perform. So if you guys enjoyed this video, make sure to drop a like, subscribe if you haven't already, and make sure to check out some of my other Overstock videos I put in the corner of the video. I go into much more detail on other companies inside the Medici Ventures portfolio, which I think you guys would get some really great value of. Companies like T0 and Grain Chain are growing massively, and these could dwarf the current valuation of this company. Now, Marcus Lemonis did mention that he was going to look into the companies further because he does really think there are some fantastic businesses inside that portfolio. But hopefully he can gain some of that value out of that portfolio for us. So if you guys enjoyed, make sure to subscribe, like I said, and I'll see you guys in the next one.